Can you please define and describe the Fib trap once again? Yep, no worries. So the Fibonacci trap is meshing together Fibonacci and false breakdown. So let's say this is the RTH price action. So let's say we push up at the open, right? And then we pull back, right? Let's say we make a new low of day. So this right here, this right here would be your significant low of interest to watch for a potential false breakdown, right? But we're not necessarily entering down here. We're waiting for the Fibonacci trap. So when we see that price action is reversing back to the upside, let's just say right here is where it found resistance. When it's reversing and we recover above the significant low of interest, then you're simply trading the higher low back into the false breakdown trap pivot. And that's where you draw your opposing leg like so, right? We're looking for a reversal. That's why we call it the trap, and that's why we call it the opposing leg. We're looking for a reversal back to the upside. So once we get filled over here, right? Once we get filled over here, we're placing our stop loss behind the lows. We know that contextually, if this false breakdown is to work, then sellers simply cannot make more lows. So if our trade idea is to be invalidated, that's where we want our stop loss to be. And then from here, we're just looking for upside targets, 1R, the high of the day, etc. So on Wednesday, the area of interest was the overnight lows, right? So let's get the horizontal line back. These were the overnight lows. You see that price action was pushing up in the pre-market, and then for RTH, we pulled back below the low, and then we recovered above the low. We pulled back into the Fibonacci trap, and we were absolutely gone once sellers got trapped, right? Absolutely gone back to the upside.